All right, that is Kiran Mazumdar-Shaw on that big transaction that took place today. But moving on, Aditya, let's talk about GAIL and how is it looking on the charts?
Cheryl is gearing up for the next leg of up move. If you take a look at the chart pattern recently, it went under a consolidation phase. In fact, it corrected from the recent highs of 113, 114, and from there it tested its breakout point and it has resumed its uptrend now. Again, on the verge of a breakout from another downward sloping trend line, which is placed at 111. So traders should closely monitor 111. That is the resistance, immediate one. If that is taken out decisively, my sense is one should definitely look at adding on to this or adding onto the stock in their portfolio for a target of 116 to about 120 on the upside, easily achievable. Plus, if I take a look at all the set of technical indicators, they're suggesting that the up move is going to follow through soon, anytime.
Okay, keep an eye out on GAIL and those levels over there. Let's move on, talk about Mahindra Logistics, Vamakshi. This one and focus on the back of its numbers as well.
Yes, another earnings candidate, and Mahindra Logistics is actually declining in trade after the numbers came in. When we look at the revenue from operations, that saw an uptick of nearly 17% on a year-on-year basis. EBITDA was also up 17%, but the company reported a loss of 1 crore versus a profit of 7 crores as seen last year. And this was mainly on account of higher operating expenses in a weak demand environment. Now, third-party logistic players such as Mahindra Logistics are facing a challenging demand environment due to softness in e-commerce movements as well as consumer durable segments. The supply chain management segment, which contributes more than 90% of the company's revenue, nosedived to a loss of nearly 3.7 crore rupees from a profit of 64 crore rupees from a year ago. The enterprise mobility service segment also reported a loss of 0.9 crores, down from a profit of 1 crore a year ago. So overall, we're seeing that the company has reported a weak set of numbers, and that is the reason why the stock is declining in trade today. As of now, the stock is trading at the day's lowest point, down nearly 3% as we speak.
All right, that's Mahindra Logistics for you. But Havells, Aditya, how is this one looking at the charts?
Cheryl yet to start its up move, and mind you, once it starts its up move, it's going to test those levels of 1275, 1350, which are my immediate targets, very fast. Approaching its 200 DMA, that is the immediate resistance, which is at 1230. And given the fact that we are already seeing a good up move in the likes of Voltas, I believe Havells should join the party soon. It's already broken out from a narrow consolidation phase. The moment it starts to trade beyond its 200 DMA, which is again at 1230, one should definitely look at adding onto it for a target of 1275, 1350 on the upside. Volumes too are on the higher side, which suggests that buying is seen on every uptick.
Okay, that is Havells for you all. A buy call coming in for Havells over there. But let's move on, and Mahindra Group, one more company, that is Mahindra Lifespaces, Harsh, that you picked out for us today. What's the reason for this one being in focus?
One, in fact, a redevelopment project. So what they've done is they've been selected as the preferred partner to redevelop a residential society situated in Malad, which is in Bombay. And the land parcel is around 3.68 acres, and what the company also seems to look at in terms of revenue is that 850 crore of potential revenue will come out of this particular win. That's quite significant given that in FY22 the revenue which Mahindra Lifespaces clocked was around 400 crore. So this is a significant chunk, significant value add, and you can see the stock had actually seen a bump up of almost 3% in early trade today, but it's come off that and probably trading at the day's low at the moment, up just 1%.
All right, Aditya, Metro Brands, this one actually seems to be in focus, especially the entire footwear pack has been in focus of late. But Metro Brand in particular, how are the charts looking for this one? Do you think this will be able to sustain momentum, or you see this one consolidate for some time?
Already consolidating, Cheryl. It's time for the stock to resume its up move and hit levels of 900, 950. It's broken out from a bullish cup and handle pattern in trade today, which is a positive sign. And on the upside, as I mentioned, stock can easily test levels of 950. Do watch out, volumes are on the higher side. The recent bullish candlesticks, if you check, were on good volumes. So the build-up is on good volumes. The technical indicators are suggesting a bullishness. So all in all, a thumbs up for the stock, and my sense is go long and will test levels of 900, 950.
Okay, let's Let's move on and talk about Persistent Systems. This stock is in focus on the back of its numbers as well. Quarter-on-quarter basis is what we compare the numbers, largely in line, but a slight miss that has come in on the profit front because profits actually include even a forex loss as well as a one-time loss, which is impacting the profitability of the company. Let's not forget the stock was quite in a good momentum and a strong momentum ahead of its numbers. That is why a bit of a tempered move that we're seeing coming in from Persistent System today. Dollar revenue came in at 274.6 million, which is up by 4%, approximately in line with the estimates. We're seeing an improvement in terms of the growth rate versus last quarter of 3.4% as well. Rupee revenue saw a growth of around 4% as well. CC growth rate is at 3.5%, which is a bit on the lower end of the range as well. New TCV deals are at 250 million USDs, which is in line. So contribution from the top 10 clients inched up higher as well to 37.4%. All in all, profits is what we're seeing a slight miss on. Otherwise, the numbers are largely in line. A muted move is what we're seeing for Persistent Systems.
All right, let's put the spotlight on JSW Steel then, Aditya. And on the charts, how is this metal major looking to you?
Again, looks very good on the charts. Cheryl stock has broken out from a bullish flag pattern, resuming its uptrend. In fact, if you take a look at most of these metal pack stocks, they are buzzing in trade today. JSW Steel, I believe, could be the top of the pack and can test levels of 740, 750 on the upside, trading also above its immediate moving average hurdles. Volumes are also encouraging. So all in all, looks like a good setup for a move towards 740, 750 on the upside.
All right, that's JSW Steel for you. Bullish trends is what Aditya is picking up for this one. But moving on, let's talk about Sun TV. No doubt this particular stock is trading flat in today's trading session, but UBS has come out with a note where they downgraded the stock to neutral from a buy rating. They've also gone ahead and cut the target price to 500 rupees per share from 600 rupees per share earlier. They're saying the near-term ad revenues is likely to remain soft for Sun TV, and they're saying rising digital disruption and lack of meaningful contribution from the OTT platform as well. They're not seeing any major positive catalyst going ahead for the particular company because it lacks of post-earnings calls and the high managerial remuneration. That also remains an overhang for Sun TV. So a thumbs down coming from UBS to Sun TV in particular, with a downgrade on the ratings as well as a cut in the target price.
Okay. Let's move on and talk about MCX on the charts, Aditya. How is this one looking like? Because it's become quite a range bound, you could say, in terms of the last 3 months at least. What should we be expecting on the technicals for this one then?
It's breaking out, Vinny, now after the consolidation. In fact, it corrected also before the consolidation and then it went into consolidation, as you mentioned. Now it's breaking out of that consolidation phase. If you take a look at BSC today, it's shot up from 7-8%, and there's a good build-up in MCX as well. So I believe on the upside, stock can easily test levels of 1550, 1640. Could be more of a positional trade given the fact that stock is a slow mover, and plus the RSI 2 suggests that the up move which has started in trade today could continue in the coming trading sessions. So definitely it's an add at current levels, and once it starts to trade above levels of 1500, one can add on further for targets of 1550 to about 1650 on the upside.
All right, moving on then, let's talk about an OMC and HPCL, Vamakshi. Why is this one in focus?
This counter is in focus on the back of a positive note that came in from UBS. Now, what they're highlighting is that the outlook for the company is improving, and they're also seeing some good visibility as far as earnings growth is concerned. We're also at the end of capex cycle as far as HPCL is concerned. UBS highlighted that HPCL is yet to recover from its underperformance seen in FY23, and that is due to perceived concerns on earnings visibility as well as elevated levels of debt as well as capital work in progress. However, the integrated margins for diesel and gasoline do remain strong for this counter, as well as the commissioning of Visakhapatnam refinery expansion could drive a 15% CAGR in refinery throughput from FY22 to 25. They also expect healthy earnings as well as completion of major projects, which could in turn drive a 34% reduction in debt by FY25. So on the back of that, they've actually reiterated a buy rating on HPCL. So positive note that has come in from UBS is the reason why this counter is in focus, trading at today's highest point, up nearly 1.5%.
Okay, that's UBS's view on HPCL. But Aditya, what's your view on the charts for HPCL? Last 6 months surely seems to be doing well, but is that here to stay? Could we expect a good run-up?
The view remains the same, Vinay. It's a bullish view on HPCL, and the run-up which you're seeing today, it's likely to continue at least the levels of 257, 260 on the upside. It's broken out from again a triangle pattern, range-bound consolidation phase, and the volumes are pretty healthy on the upside. RSI has taken support at the lower end of the bull zone, and from there it's turned northwards. So everything suggests that the uptrend which has started today is likely to continue. So add on the stock for targets of 257 to 260 on the upside.
That's Aditya State coming in on HPCL. But Harsh, A Small Finance Bank, why is this one in the spotlight today?
Coming through, Cheryl, for AU Small Finance, and it will remain in the news for today as well as tomorrow, because likely the results will come out post-market today. We're expecting to see an NII growth of 26%, very solid by AU. It's going to come on the back of very solid advances growth, 5% sequential advances growth. That number has already been declared by the bank. We also saw strong deposit growth, 13.5% sequential deposit growth from AU, 32% higher on a year-on-year basis. Operating profit, though, will rise up 20% on the back of solid OPEX as well that the bank continues to churn out. Provisions are expected to spike up slightly on a sequential basis, and therefore PAT is expected to come in 20% higher on a sequential basis, on a year-on-year basis. So we're going to see or expecting to see a solid set from AU Small Finance. The other piece, of course, on asset quality, we're expecting that to be absolutely steady, both on a year-on-year as well as on a sequential basis. So no surprises expected on that front. Of course, need to wait and watch as to how the numbers come out. And at the moment, stock quite muted, 0.2% low.
Let's talk about MTA Tech on the charts, Aditya. What should we be expecting from this one? When I look at it in the last 1 week, nothing exciting has happened. Last 1 month also just managed to give returns of 10%. Is it a turnaround stock? Could we expect a good run-up?
I believe, Vinay, it's time for the stock to show its true colors. And as you mentioned, stock hasn't done much for itself in the past 1 month, or in fact maybe more. Just a narrow consolidation. Today it's broken out from an inverted head and shoulders pattern, which is a bullish pattern, and looks like volumes are also on the heavier side. So I believe stock which has started its run up today, it has more legs on the upside, and clearly the risk to reward is also in favor of going long at current levels. So you can look at targets of 2050 to about 2100 easily on the upside, but more of a positional trade. Along with that, if you take a look at the entire defense space, most of the stocks have done well for itself. So it's time for MTA Tech actually to chip in and show its up move. So at current levels, definitely it's a low hanging fruit. Add on to it with a low risk to reward, target of 2100 on the upside.
Okay, keep an eye out on those targets. 2100 on the upside is what we could be expecting. Move on, and Macrotech developers, that stock is in focus again, and this one is on the back of a brokerage note from CLSA. They are lowering their target price from 1083 to 1048, a small cut in terms of the target price of the company. What they believe is that the pre-sale numbers for Macrotech in Q4 were in line with their estimates. On a high pre-sale base, in FY23, its target is currently 20% of pre-sale CAGR over the next 3 years as well. What they're also highlighting is that the stock has corrected sharply YTD when you compare, and thus they have upgraded their rating from underperform to outperform, just cut the target price mildly over there. They believe they have lowered their revenue recognition estimates marginally due to the change in the completion timelines of the project, and also lowered their EBITDA margin estimates to factor in relatively lower margins for its JDA projects versus the legacy owned projects as well. So on the back of that, keep an eye out on Macrotech.
All right, let's just take a note of what the benchmarks are doing, and Nifty has scaled past that 17,800 mark. We have seen a good recovery from the day's lowest point, 0.5% uptick coming in for the benchmark indices. But Aditya, Chola Finance, how is this one looking in the charts?
It is going through consolidation, Cheryl, at the moment. It's given up its morning gains, but I believe it's time to look at the stock after a good up move. Stock has entered into a narrow consolidation phase. On the upside, 850 is acting as a major hurdle for the stock at the moment. Once it crosses 850 and sustains beyond that, I believe that is when the real up move will start, and traders should definitely look at adding on to the stock above 850 for a target of 900 to 950 on the upside. the breakout can happen anytime soon. And plus, if I take a look at the technical indicators, is clearly sitting in the bullish territory, so which clearly tells that the up move is nowhere dying anytime soon, should likely to continue in the coming times.
All right, let's shift focus then and let's talk about Zomato, because that particular counter is soaring in today's trading session. It has hit a 3-month high on an intraday basis. You saw the stock climb up as much as 5%, and one of the reasons why is the Citi has come out with a note where they have a buy rating on the company with a target price of 76 rupees per share. They're saying that both Zomato and Swiggy have introduced monetization in their dining out segment. While this appears to be a limited rollout for now, nevertheless, they are saying this is positive for the medium-term platform monetization. That's one note coming in on Zomato. The other one that you have is from Morgan Stanley, where they're saying the core of food business, ex-quick commerce, could come closer to break even in Q4 of 2023. They're expecting losses in Hyperpure to reduce. They're also saying that the adjusted EBITDA losses is expected to fall to 10 crore rupees for core business versus 38 crore rupees in the quarter gone by. They're expecting Blinkit adjusted EBITDA losses of about 210 crore rupees. This against 230 crore rupees in Q3. So yes, you have the brokerages that are reposing their faith in Zomato. You saw the stock surge as much as 5% on an intraday basis. Nevertheless, still holding on to gains of about 3.6% at around 58 rupees per share. That's Zomato for you.
Okay, that was Zomato, and that was the last stock that we were delivering to you all on this edition of Market Fatatfat. Thank you so much, Aditya, Harsh, Mamakshi, as well as Kunal for joining in with us this afternoon. And it's a goodbye from Sharif, myself, as well as the team who put this show together.